Hello, everyone, and welcome to Market Talks. I'm Ray Salmond, head of markets at Cointelegraph. Here in this show, we discuss the latest in what's happening in the markets, what's shaping the markets, and we do that by getting valuable insights from industry leaders, traders, and influencers. Today's show is sponsored by Exco. And our guest today is Justin Kramer, the CEO of Badgerland Home Crypto Mining, a US-based company that specializes in ASIC miners, the computers that are used to generate cryptocurrency. And Justin provides consultation to home-based operations and larger startups on how to set up their mining farms. How are you, Justin? Good to see you.
Doing well. Thanks for the introduction.
Yeah, hopefully it was accurate.
It was. Yes. A little too flattering.
A little too flattering. Hey, fake it till you make it, right?
Amen.
So 2-3 months ago, miner prices or ASIC prices, especially for Bitcoin miners, were dirt cheap, right? Like, can you give me how much was the S19J Pro if I wanted to buy 1, 5, or 50? How much was the one that's 110 terahash?
If you wanted to buy one, I'll go with the 104 terahash, the J Pro. You were probably looking under 2 back then. Now, even with this recent decline, miner prices take weeks to trail the market and come down along with the market, even though they skyrocket as soon as the market goes up. But even with this recent downturn, we're sitting at about $2,200-$2,300 for a single unit. If you get up to 50, 100, 200, back then you were looking at $8-9 a terahash. Now you're looking at $12-13 a terahash, so $300 or $400 more.
Mm-hmm. And demand-wise, what's going on between the S19 XP, the S19 Hydro, and the most efficient S19J Pro? Like, what is it that smaller size miners and larger size miners want right now?
So the smaller miners are going for efficiency. So they're going with the XP. So the XP prices they've come down, but it's been very monotonous, very slow to come down to where it's at now, right around $4,000 that you'll be looking at for one of those. But most people are going to go with a J Pro, even though it's not quite as efficient as the XP. Just the initial expense to get into the miner, you can basically buy 2 of them for the same cost as an XP. So you got that going. And then if you have that low electric rate, you're not worried too much about it being less efficient than like an XP.
How much were these units, like the S19 J Pro series and some of the other like hot topic ASICs? How much were they 1 year ago and 2 years ago versus how much they cost today?
It's kind of crazy how much they were going for. They were going for upwards of $6,000, $7,000, $8,000 per miner back then. Some even more depending on when you got it, depending on availability, how urgently you needed to have it. So yeah, there's been a substantial drop in price, but these miners the J Pros are still sought after by the bigger players, to kind of supplement their operation and get as much hash rate going as possible.
So miners that are for sale around $2,000 to $2,300 today cost $12,000, $8,000, $20,000 1 to 2 years ago.
For Bitcoin miners, it gets even worse if you look at Kadena. So like a KD5 it was the KD6 back in January of, I think it was 2021. You had to win a lottery, and for winning the lottery, you got the privilege to pay $50,000 or $60,000 for one of these KD6 miners that mines Kadena. those miners are essentially not obsolete, but pretty close today.
That's quite a hit. So then what's the real situation for mining operations who paid those high prices? Are they just gritting their teeth and trying to ROI on and just holding the unit and keeping it running and trying to ROI, or have the worst of these mining companies kind of blown up, or did they recapitalize? Like, from your point of view, from who you talk to and the data that you're looking at, how are people dealing with holding on to these inefficient bricks?
I mean, the whole miners are the ones that, for the most part, don't have a choice but to hold on and just hope that the coin goes up in price and value. They hold on to every coin they mine throughout the bear, throughout the bull, and then they sell at some point. And I mean, if you paid 60 grand for one of those things, you're never going to ROI, but hope to recoup as much as possible. And then you also have the option during a bull market of flipping your miner. So while that KD sticks today is worth maybe $1,200-$1,500 at the most, during a bull run, you might be able to get 4 or 5 grand for it. You just never know. Then you look at some of the bigger players that, even though they have a J Pro, that's not necessarily a brick. If you pay $8,000 or $9,000 for a miner that's worth 20% of that now, you're kind of SOL.
What do you think about the new Biden budget, where I saw part of it includes a 30% tax on miners and like Bitcoin mining operations that use electricity?
Yeah, basically, whatever electricity you use to run the miners, you have to pay. It gets grandfathered in gradually, but ultimately 30% tax on that electricity, which is, to me, absurd. I mean, as soon as I saw that, I did a bunch of research yesterday. I mean, it's something like 55 to 60% of all the mining electricity is renewable. I mean, it just doesn't make a ton of sense why he's doing that.
Yeah.
So it feels kind of like an attack on crypto, but at the end of the day, I don't think it gets there.
Right. That budget's just not going to pass in the House, and it's basically dead on arrival, so there's nothing to it.
Or I think the worst case that I see happening, this is just me talking, is maybe if you're mining on something that's not a renewable, then you have to pay a tax on that. But to me, it makes no sense if you're claiming that it's bad for the environment to penalize a mining company that's advancing renewables. So,
yeah, I'm looking forward to hearing more insightful and educated discussions on the matter, because it just came out yesterday. So I wasn't sure if it was like tax on, what is this, a tax on the actual coins that they're producing, or
it's on the electricity. It's on the electricity that's used. So like, even if you host a miner with a facility, if you would have to pay some kind of tax on that electricity that you pay for to run that miner.
When we spoke last week, you had mentioned that you were really perplexed by the price divergence between altcoin miners and Bitcoin ASICs. What did you mean by that?
So I guess you had a good analogy when we had talked about that too, about how there's just a ridiculous glut from these big mining companies going under. So there's a glut of these J Pros out there, the 96, 100, 140 miners. So obviously supply and demand comes into effect. You have a ton of miners, those prices are going to continue to go down until those are snatched up. But the funny thing is, you had like the HS3, which recently had a price reduction, but you had the HS3, you had the D9, the KA3, the K7, that were all just still hanging around, basically up at the prices that they were at a month or two ago. So I mean, a KA3 even today is $8,500 or $8,500. And that's with Kadena at under 90 cents, making less than $11 a day with the miner. So it's just, there has to be a demand for these coming from somewhere. And these altcoin miners, they have the potential to deliver more rewards. So I think that's why people are gravitating towards these than the J Pros, where you're going to make $1 or $2 a day.
All right. So you're saying that like miners are choosing to go and mine altcoins because they're making more per day on that, and then can like auto dump some of those profits into Bitcoin if they want. And you're also saying that there's an oversupply. There's a liquidation sale with a lot of Bitcoin miners like the S19J Pro series because they're not profitable. Hence, there's not much demand for them, and they're in oversupply. But like the K7 and KA3 are made by Bitmain, I think. Was that correct?
Yep.
And those are new. They're in fairly limited supply, aren't they?
Yeah, they're fairly limited supplies, but it's not, if you want one, you can get one. You don't have to win a lottery to get the right to one.
Why do you think Bitmain put out the K7 and KA3 when there's so much like Goldshell product out already? And then also let's explore, is Kadena a scam? And if it's not a scam, why do you think it's not a scam?
So I guess in my opinion, I think Bitmain took direct aim at Goldshell when they released the series of altcoin miners that they just did. The KA3 is 4 times what the KD Max was as far as hash rate. The K7 is about 3 times as much as the next closest. The HS3, same thing. With all these miners, I really think that they took direct aim at Goldshell to say, hey, you're doing your thing, but we can do it better. And they really have. Like, they essentially made a lot of the Goldshell miners obsolete with this latest series of miners that they've released.
Yeah, that's wild. Do you think it's possible that Goldshell could go out of business?
I mean, I personally, unless they can either surpass Bitmain or get close with a similar efficiency, which I think is highly unlikely. I don't think that happens. I think their only shot is to go after a niche market of home miners who want a 3 to 700 watt miner in their house that they can plug into a 110 volt outlet and not have it make a bunch of noise, kick off a ton of heat. I think that's their only shot, really, to compete at this point.
What's the play on Kadena? What makes Kadena possibly a good investment? Because, like, from my view, I see a ton of miners, a ton of ASICs were put out, right? There's a ton of them. And more of them came out as KDA price went up. And then now KDA price has crashed. And, these miners continue to come out, but maybe they're not falling into as many hands. And I don't really know what the network does. They're not like super active about what their roadmap is and what they do. I don't see a lot of cross-chain functionality with KDA token. There's not staking or liquid staking. Like, at least with Bitcoin, it's a commodity. There's derivatives around it. It's semi-regulated in a way if you're paper trading it at CME, right? It's everywhere. It's deeply liquid. There's a whole network and ideology, and like it's its own little solar system, and there's multiple reasons why I can consider an investment in Bitcoin, but I don't have all that clarity when it comes to Kadena beyond proof of work network. So what's your view on it? Is there a play there?
I think there is. You are correct. They're very diligent, I'll say, in how they approach tasks and getting things done and getting things accomplished. They have added to their team recently. The biggest reason I'm a bull on Kadena is the investment that they made back into their own community or into their own project. So they invested, I think it was $300 million. I can't remember right now, but it was over $100 million that they invested into development for their project. which, yeah, at the time they had a market cap of about 300 million. So it was sorry, it was 100 million. So they invested like a third of their market cap back into development, which to me shows a lot of faith in that project. And they have a lot of use cases as far as like how many transactions they can handle per second, their ability to integrate with enterprises, things like that. And then I think too, like you alluded to, I think the proof of work mining does help prop it up a little bit, because they have committed to proof of work. So we know that there's going to be mining. We know that there's going to be miners coming out to secure this network.
When you talk to people that you consult with to build farms, what sort of ratios do they have of ASICs? Like, is it 70% Bitmain, S19J Pros, XPs, and Hydros? And then, like, I got some Ivy links for doing CKB, and then I've got some Goldshells or KA3s. Like, a third of my farm is comprised of those for mining Kadena. Like, what's the kind of standard template ratio setup that you advise people on when they're looking to build a farm?
Between manufacturers or between coins mined?
I don't know. I just mean, like, if I go to a mining farm at like Riot right now, what am I going to see there? Only Bitmain, like
You're
Bitcoin
just
mining?
gonna. So if you go to some of the big farms, you're just gonna see Bitcoin. They're not gonna mess around or dabble in altcoin mining at this time. So they're full on, full speed ahead, just Bitcoin mining.
Yeah. Why?
As uncertain as crypto is, Bitcoin is more certain than the rest. So it's easier to project. It's easier to do your calculations, OpEx, all that stuff. Just doing it based off of Bitcoin, off of something that, yeah, it might tank by half, but it's not going to tank by 80% in a week,
Right.
like you might see with some of these.
So if you were talking to, let's say, a client who's got like 500,000 to 2 million to put into a farm, much smaller on their own property, maybe they got 3 acres of land, what would you advise them to do? All Bitcoin, or to balance and get some altcoin miners in there?
I mean, it all comes down to the risk appetite of the person that is setting it up. So do they want to have that higher upside with those altcoin miners, or do they want more or as close to it as you can get mining certainty with mining Bitcoin? A lot of people, I have to talk them off of doing like 60-70% altcoin mining, just so that they can have like a stable operation. Because if you strike out on 25% of your operation, you're probably not sitting in a good spot.
So how are things kind of developing on the cloud-based and NFT-based mining as a service part of the industry? Is there more interest in that now? Are you seeing an uptick in subscriptions to those type of services, especially given that co-location and just setting up your farm itself is quite expensive right now?
Yeah. So as far as cloud mining goes, there's very little progress, maybe some, towards companies establishing themselves in the industry. Where there's a lot of movement and a lot of, I think, potential, and where a lot of mining farms could come from is with the NFT mining projects. So you have some of these projects like Alpha Shares, Kadena hashing, fraction mining, that are all setting up these farms with just hundreds and hundreds of miners, for basically that their NFT community that they've established, where they share those rewards.
See that as something that, as mining itself becomes more expensive and unobtainable for your kind of like at-home miner or your retail investor, they're basically getting priced out of doing that at home. So do you see the kind of like NFT based and pooled mining becoming more popular?
For people that want mining exposure, I definitely think it's a possibility. So I have something similar where I didn't go the NFT route, but started a mining farm that people that called me to buy a miner that it wasn't necessarily right for them because of the heat, because of the noise, where they can invest in a mining farm at $5,000-$10,000, the cost of a miner, and still get those rewards and returns. And with NFTs, it's the exact same thing. You're just basically, it's a different way to raise capital for a mining farm.
Right. And then through that, you basically hold equity in the company and are entitled to a portion of their mining rewards, but you don't need to buy the ASIC. You don't need to ship it to them. If it breaks, you don't need to pay to fix it. You're purely just like making an investment in this company, and your ROI comes from like the rewards that they mine, right?
Yeah, so you don't get equity. You just get, it's basically profit sharing. So you get a percentage of the reward pool.
Right. So you're not locked in for like 2 years, how you are with like Compass or Blockware Solutions, where you send them a miner, they hold on to it for a year or two. You're paying $200 a month in power bills. You're kind of like stuck with them. You don't have all those obligations when you do NFT-based mining.
Yeah, this is just you pay your one-time NFT fee, whatever it costs. They range anywhere from a couple $100 up to a few thousand for some NFTs mining projects. But I think that if these first few projects that have come out continue the way that they are, I think we're going to see a slew of copycats, because we're already seeing a lot of new NFT mining projects start to pop up, start to build their communities and things like that.
Help me separate the signal from the noise, because there's two different stories being told right now. One is that the Biden administration and senators and congressmen, lawmakers, they have a very skeptical eye towards cryptocurrency and mining. They want to regulate it, tax it, say that it's some sort of get rich overnight scam. And that seems to be complicating matters for like big miners in the States. But then on the flip side, when you look at like miners in ERCOT, miners and renewable energy providers and nuclear energy providers, there's all this synergy and a strong relationship being built between the two that's profitable to both sides. So is mining being like choked out and kicked out of the states? Is that what regulators are aiming, or lawmakers at least are aiming to achieve? And do you think that that will be successful, or should we more so be paying attention to the relationships developing between like power generators or energy generators and mining companies?
So I don't think regulators or regulation has the goal to push crypto mining out of the country. I do think that this 30% excise tax, if it does go into effect, would drive a substantial number of miners out of the country if it went into effect nationwide. Miners are going to go to where the electricity costs the least, just period. So if that place is no longer here and we're no longer friendly to crypto mining, crypto miners will find somewhere else, just like when they went from China to the US. They'll go from the US to the hot name right now is Paraguay, or the UAE. So, I mean, they'll find a place to go. That's not the issue. It's just whether or not they'll stay here.
Yeah. All right. Well, that was great. Thanks for sharing all of that with us. It sounds like what we're seeing in the markets right now and the way that it's impacting crypto miners, it's kind of a temporary blip. Justin, I appreciate you coming on again and sharing all your insights and expertise with us. If people want to hear more from you, follow you, keep up to date with your insights, where's the best place for them to reach you?
Badgerland Crypto, no E in Badger, character limitation from Twitter. Otherwise, you could check me out at badgerlandcrypto.com or badgerlandminingclub.com.
All right, everyone. Thanks for tuning in. You've been listening to Market Talks. We're here every Thursday at 12 p.m. Eastern. Click like, subscribe, and we will see you next Thursday.